Within the last 24 hours, Bitcoin has seen a brutal correction, resulting in a weekly candle pushing under the 200-day moving average and over $300 million in liquidations occurring within that correction. In today's video, we're going to be discussing the short-term price action, the macro price action, and what impact this has had on the overall trend. Let's go ahead and jump in. Okay guys, welcome back to the channel. I hope you're all having a fantastic day today. We're here to take a look at Bitcoin on the higher time frames as Bitcoin has broken down from 200 moving average on the weekly. We have also lost the high time frame daily horizontal support at 26,000 to 25,800 and have officially cracked that weekly trend. The question is this correction just getting started, or is it nothing more than a fake move toward the downside? These are questions we're answering, so we'll go ahead and get into it. Now, before we do, smash the like button, hit the comment button, and subscribe to the channel, guys. We do daily videos on Bitcoin, focusing on the facts, the data, the technical and structural levels, the news events, the economy, and more. No BS, no hype, no emotion, pure raw TA. Those are the kind of content you're interested in. Join us on Telegram. The second link down below. You've got access to our updates, our analysis, our videos, our educational posts, our news events, and so much more. If you've been following the channel, you would have known we sold Bitcoin all the way up over here at 30,000 on the 14th of April after buying it all the way back down at 16,500. We told you guys at 30,000, we have noticed we had bearish divergences. We had decreasing momentum, decreasing volume, liquidity, and velocity, resulting in what we expected to be a downtrend or a downward move, which would follow. Since then, we have seen that actually come to fruition. We have seen the daily trend move toward the downside. We've seen a daily downtrend develop, and we have seen the prior monthly candle actually close out bearish. We saw that the opening price of the prior candle being that we closed below it, we closed that closing price below the prior opening price, representing a shift in momentum, direction, and strength as expected from the major $30,000 resistance. The question today is, what does this all mean for Bitcoin? Is this the end of this reversal? Is the weekly trend still intact? And could Bitcoin bounce from here, or are we just going to see lower prices? So let's go ahead and get stuck in. And I do want to mention, guys, if you're interested in joining our VIP channel, which we post daily trading signals for, we post exclusive analysis for, you can see some of our trades in here from the last 24 hours. We had ICP, huge profits on our short over there. We had AVAE over here, massive profits on our short over here. You know, we're looking at 90% profit. We're looking at over 160% profit on our short from Matic from yesterday. Absolutely massive shorts, trading signals, entries, targets, stop losses, exclusive analysis, and access to 4 separate group chats. All of that you can get access to via our group chat over here. Go to our free channel. Click the pinned comments and go up to click more information about the VIP channel. You can get all access. So let's go ahead, guys, and get into it. Starting off with the market data. Currently, Bitcoin is up 134% in terms of 24-hour volume. We're sitting at over 100 billion. Looking at liquidations, holy hell, guys, we're 513% up in the last 24 hours with over $300 million in liquidations. We've been warning you guys for the last few days, a big move was coming, a volatile move was coming, an explosive move was coming upon the break up or breakdown of this range. We saw a very explosive move downward. And in yesterday's video, we were telling you that we were very much in a downtrend. We were very bearish. We were looking for a move toward the downside, and that we were not even expecting any upside unless 27,600 to 27,400 was broken. So we have seen that correction. We've seen all the targets hit on that move. Our target 1 was a POC. Our target 2 was, of course, this lower support at 2,600. And of course, our next target was this lower range. So a perfect move toward the downside. Congratulations if you've been following the videos and you caught that move. Moving on to monthly returns, we can see June is now in the red, 5.72. Moving back to the monthly chart, as you can see, we did actually close out a bearish monthly candle. As I said, this was a bearish engulfing candle, resulting in a shift in direction, a change in direction. The question is, which we'll answer today, how low could this change in direction take us? Could this result in a macro reversal? Could this result in a macro downtrend, which could take us underneath some of these opening prices? Or is this nothing more than a little bit of a pullback, a little bit of a healthy correction after a large move? We'll answer that in today's video. Moving on to liquidations, you can see the majority of those liquidations came from long positions, with around 92% of liquidations actually coming from longs. Absolutely wild price, guys. I've been warning you for weeks, ever since we sold 30,000. We've told you the trend is no longer bullish. We are in a daily bearish trend. It's a weak bearish trend. We've actually progressed now into a stronger short-term downtrend, but we are still in a weak daily downtrend. Let's go over to the DXY. We can see the DXY is struggling a little bit here, printing a lower high. Again, not too much concern here, as we do have our uptrending support. If we do lose this uptrending support, we can expect a continuation lower. Until then, any sort of correction, any sort of move up and down between this uptrending support and this horizontal resistance is just considered healthy consolidation or just normal price movement. We don't expect anything significant to come from this. If we break above this rejection zone, this liquidity zone, we expect a strong move upwards. If we break below the uptrending support, we expect a strong move downwards. I wouldn't be over analyzing a DXY right now, particularly coming into a bunch of news events such as the debt announcement, such as CPI, which is coming up, such as inflation, such as PPI, and such as the interest rate decision. These are going to shift the market. These are going to change the DXY, and these have potential to either help or further damage Bitcoin's price action, which we'll discuss in another video. Moving on to the S&P 500, we can see the S&P 500 is testing resistance again. A break over this resistance will result in a move toward the upside. We're looking for an upper target of 4,500. If we do fail to break above this resistance, we're expecting a move toward the downside. Again, no directional move will occur unless this downside of this uptrending support breaks. If we lose uptrending support, that will represent a shift from our uptrend. This is our uptrend. We draw an arrow, our uptrend into a downtrend, and we could develop a downtrend moving downwards.Moving on to the Dow Jones, exactly the same thing, guys. We're looking for a weekly close above either the uptrending resistance, or we're looking for a weekly close below the uptrending support. Either way, if we break below here on the weekly, we expect a downward continuation. We break above here on the weekly, we expect a upward continuation. Keep it simple, keep it stupid. Don't need to overanalyze it now. Just watch it, because we do have a lot of developments coming. Let's go ahead, guys, and get into a Bitcoin. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. So, a lot has happened, and we need to discuss exactly what has happened, and more importantly, the impact of what this means on the macro chart. How has this changed the macro chart? Does this really mean a lot? Does it shift the overall bias on the trends? Does it change the targets of Bitcoin? Does it change the invalidations? And the short answer to all of that is not really. It really doesn't, because although we have seen a strong correction downwards and we have lost a major short-term range, we have still got our higher time frame ranges intact. And the high time frame range intact that we're looking at is going to be the 24.4 to 25.5 major weekly support. This is probably the most important level on the chart right now we need to hold to keep the trend on the higher time frame up. Right now, we are not in a macro bullish trend. You can see if we zoom out, the macro bullish trend for a monthly uptrend to initiate, we need to get above 30,000, okay? We need to actually break a monthly candle above 30,000. For the weekly bullish trend to be technically resumed or to be lost, we need to lose the point of which we're initiated. So if we look at this first arrow, this represents the weekly trend. We can see that it started upon the breakout at 25,000. Now, the weekly trend is definitely weakening. We'll show you from a technical perspective in a second. But from a structural perspective, we are still above the resistance, which is now support, in which the weekly trend has been developed above. And thus the weekly trend, the weekly uptrend for Bitcoin, although it is significantly weakening, which we'll show you, is actually technically still intact. And it remains intact until 25.2 to 24.4 is lost. Now, a lot of perma bears are going to say, Whale, you're wrong. Well, guess what, guys? Watch what I do, not what I say. Watch the levels. Don't listen to anything else. Watch what I'm showing you. I sold at 30,000. If I was bullish, I wouldn't have sold at 30,000. I have yet to buy back my Bitcoin because I am not bullish on the charts. I am bearish on the charts. What I am saying, though, from a data-driven and factual perspective, is the weekly trend is technically not lost yet. We do have major support here. If we lose this level, that is when the bears should take high time frame control. The short term, the bears have control already. We'll talk about that. The bears will take high time frame control upon a loss or weekly close below 24.4k. If that occurs, then the macro charts are going to look incredibly bad. They're going to look worse than they're looking. They're already looking bad, but they're going to look worse than they're looking. So, moving on from there, guys, if we do lose a weekly candle under 24.4, we enter a high time frame bearish trend, meaning a weekly bearish trend. If we lose the $18,000 level, we enter a macro. This is a monthly downtrend, okay? Monthly downtrend below 18K, monthly uptrend above 30,000. Weekly downtrend below 24.4, weekly uptrend above 25.2. Daily uptrend above the downtrending resistance represented by this black line. Daily downtrend below the downtrending resistance represented by the black line. Keep it simple. So can bulls take control on the daily chart? The answer is yes. What we need to see is two things. Number one, we need to see the price hold above the 25.2 to 24.4k level. It needs to hold that level. We are currently in a weak bearish trend. We're in a weak bearish trend as we have a daily downtrend, but a weekly uptrend, okay? We are in a daily downtrend as we're below the downtrending resistance, okay? We're in a weekly uptrend as we're above the horizontal weekly support. A loss of this level will put us into a weekly downtrend and thus turn the trend weekly bearish. The current daily downtrend is intact until we break above the RSI and the downtrending resistance, meaning for the daily trend to flip bullish and thus the weekly trend start to look healthy, we need the price to push above 28k. So moving back to my statement, the weekly trend is still intact, but it is looking weak. So let's discuss. At the moment, guys, for the weekly trend to look strong, we need to see the price break above the upper band of the Gaussian channel. And you can see the Gaussian channel represented by this red and green channel over here. Every single time we break above the upper band of the Gaussian channel, we end up rallying upwards. And this instance is actually a very important instance because if we look at where it's rejected from, we rejected from the high of the prior dead cat bounce in the bull run, of the last bull run, or the bear run. If we go back to that point, it is represented by this dotted trend line. That is the Gaussian channel, okay, on the weekly. We rejected from here, we moved down, we broke the Gaussian channel, we went up and we rejected from that same point. If we go back to the prior bull run and bear run cycle, we see exactly the same thing occurred over here. So in this instance, we can say, if we look at this instance of where we are now, the dotted trend line in this instance of the prior bull run and bear run is sitting at 48,000. And therefore a monthly close above 30,000 and thus a weekly breakout of the upper band of the Gaussian channel could result in a move toward 48,000. However, it is not looking good as we have rejected from the upper band. Not only have we rejected from the upper band, we are currently losing the 200-day moving average. A 200-day moving average is the average price of the asset over 200 days. It represents overall price strength, okay? Or a loss of the moving average over here will represent a shift in strength. So what we have over here is we have a uptrend. Okay, the uptrend has been intact over 25.2k. It's very important we understand this, guys. We don't confuse it. The uptrend on the weekly has been intact above 25.2k. This is an uptrend. Okay, we have a growing strong uptrend. So we have a developing in strength uptrend from that point of the breakout toward this point here where we met resistance. Currently, we are still technically in an uptrend as we're above 25.2k, but we have lost the 200-day moving average, which represents weakness. So what we have, and what is now confirmed by both the momentum indicators we're using, represented by the MACD, and of course represented by the Marcus OB, it represents a weakening uptrend. It represents a uptrend that has now weakened. It has shifted from a rising uptrend, okay, a strong uptrend with positive momentum, into a weak uptrend with negative or falling momentum, okay? So the uptrend is intact, but it is significantly weakening, and it is weakening by the minute, guys. If we continue down here, it is going to weaken. The Marcus over B suggests we have positive momentum as we're above zero, but we're on a downtrend. Therefore, it suggests weakening positive momentum. Okay, this is weakness. The MACD, exactly the same thing. We have, again, weakness, and we have flipped to the negative momentum. We can see the bar has printed red. That is a shift in momentum. That is a MACD cross. That represents a shift in overall strength. We have lost the 200 moving average, which represents a shift in strength. So the weekly chart is not looking healthy. And I'll say this again, and I said this weeks ago. If we retest 25.2K to 24.4K, we are unlikely to hold above it if we drop below it. So if we do come and retest this level, we need to pray for the bulls if the price retests it, because if it does retest it and we see a drop below 24.4K, it is unlikely we're going to push back above. We can push into this range and bounce, but if we see a drop below it, it is unlikely we're going to recover from that. So watch those levels. Let's go over to the smaller time frame, guys. Let's take a look at what's happening. So on the small time frame, we have seen this range now complete. This move has actually fulfilled. This chart is now complete. This is the last day we'll be looking at this chart, but we'll be keeping the ranges and levels intact. As for all of this, it's the last day we'll be going over it, because it's no longer relevant as of right now. But it is technically relevant now, but as of tomorrow, it most likely won't be. So really quickly, we had a horizontal consolidation, which lasted around 3 weeks. We said a very volatile move was coming. We had deviation to the top and bottom side, which was suggestive that the next move to occur was going to be a strong move and was going to be directional. So we saw a break from the top side down, representing we were in a range bear market, okay, or a range bear trend. Range bear meaning this is the range and we're in a downtrend, therefore it's bearish. We're range bearish because we broke from the top side down and therefore we're in this downtrend. We saw a rejection at 27,400, which was again was the major resistance point over here. If we broke above that level, we would have seen a continuation upwards to retest a daily downtrending resistance. We failed to see that. We didn't see that. We were in a bearish trend as represented by yesterday. We had multiple support levels along the way down. We had our liquidity zone, which was a bounce point. Again, we bounced 7 to 9 times along this level, failed to hold above that level, resulting in a move towards our range low. Our range low was lost. Like we said, if we lose the range low, we're going to go to 26K. We saw a move to 26K. The 26 to 25.8K level is major support, and again is the trigger point for a shift from a short-term bearish trend into a short-term, a strong bearish trend, and potentially, like I said, the weekly trend flipping downwards. Because from a technical level, the weekly trend is in a downtrend. From a structural level, it is not. So technically, we are in a downtrend, but structurally, we are not in a downtrend, and thus, we do have a strong bearish trend on the short term. Now, what do we expect to occur next? For now, we have to go off face value for what we're seeing. On the 4-hour chart, we can see, we can go ahead and delete all of this now, as we'll talk about it. We can see, on the 4-hour chart, we are technically in a strong bearish trend while we remain under 26,000, okay? Therefore, right now, every bounce that occurs, every move up that occurs will be either two things. One, a fake move up, or two, an exhausting move up, meaning the price is exhausting before the next move down. I will only be confident again that this move has been a bounce if the price is able to get back above 26,000 and start closing some 4-hour candles above 26,000. More importantly, guys, I would say as far as this, I wouldn't be confident in this level being reclaimed unless we get a daily candle close above this daily lower support. Because now the support is lost, we are now looking for a daily candle to reclaim this level. In terms of the bullishness and the bearishness, I do not expect the bulls to claim control on this chart, like I said, until this downtrending resistance is broken. The same levels of validation remain. Nothing's changed in that regard, guys. Nothing has changed. Everything we've been discussing for the last few weeks remains the same on the higher time frame. The only thing that has changed is the short term. The price is broken below. We have seen a move down. We shorted this. We got massive profits. Congratulations. The question is what happens next? And right now, we have to take it at face value until we get more information. We are in a bearish trend underneath 25.8 to 26,000. This could change. We have economic data coming up. We have CPI, we have FOMC, we have rate hike decision, we have debt announcement. All of this can shift the price action and move the price action. From a structural and technical perspective, this is not looking strong. This is looking relatively weak. And we do have to assume that weakness will continue until it is proven otherwise. Remember, when you are trading, you want to trade from positions of strength. Whether you're shorting, you want to trade from positions of strength when it comes to bearish strength. When you're longing, you want to trade from positions of strength when it comes to bullish strength. So when we have weakness on the chart, i.e. bearish strength, you want to be more leaning towards taking short positions and a couple long hedges here and there when it shows signs of bouncing. You do not just want to jump into longs because the price has dropped. If you're DCAing on Bitcoin, if you're in a high time frame trade, if you're an investor on Bitcoin, sure, you might, decide to DCA down over here because you have a high time horizon or whatever your decisions are. You want to use Bitcoin as a hedge against a dollar or whatever it is you want to do, or whatever reasons or justifications you have, maybe that is a so. But if you're a trader, you want to trade from strength, not weakness, and trading in long positions here, unless they're short-term scalps to catch little bounces, would not be ideal, guys. That's not me saying it's not going to go up. That is me defining the risk of the trend, me defining what we're seeing here on the charts and relating it to potential decisions you can make to better give yourself the probability of success. If we see a daily candle close back above this level, that is when there's probably a shift. That is when longs become a little bit more favorable. Let's go ahead and talk about the immediate short term on the hourly chart. As you can see, we have just seen another hourly candle retest and reject. We had a rejection here. We had a retest and rejection. 2 hourly candle rejections on 25.8, which again is going to be the lower resistance of that resistance zone. Not a very good look for Bitcoin, guys, but it is not looking too good. Let's smack it down to a 15-minute chart and take a look at a smaller time frame. Okay, what we notice on a smaller time frame, we have a very clear uptrending support over here, and we have obviously a pretty large gap in the VRPV sitting right above us, right over here. We can see a bit of a gap, and I do have to zoom out quite a fair bit. You can see the gap kind of takes us up to around 26,200. That's kind of where we start peaking up again. Around 26,100 to 26,200 is where that volume starts to rise again. We'll zoom back into the small time frame and just annotate those levels really quickly. 21,100 to 21,200. I'll go ahead and draw some stuff in here. We can see we had a volume chunk start to increase in this range. Okay, so we have our uptrending support right over here. We have the price is obviously displaying a degree of weakness as we have a high, we have a lower high. Obviously, we have a decent amount of liquidity over here in that resistance zone, and we are right below the resistance. And therefore, obviously, the bias is downwards. But we need to take a look at the momentum. So let's go ahead and bring up our RSI and see what the momentum is telling us. What is the momentum showing us? What are these indicators? For some reason, not popping up. Okay, there's our first one, and we'll go ahead and bring up the RSI, and we'll see what's happening. So, okay, don't know why the RSI isn't popping up. I'll try one final time. Oh, that's because I'm bringing the wrong indicator up. My bad. Clicking the wrong button. Okay, there we go. Perfect. Okay, so what we do, we take a look at the uptrend over here, and we try to find discrepancies between the momentum and the trend itself. What we can do, we can draw that same similar trend line in here. We can drag it across to the points. As we can see, this represents weakening momentum. We have uptrending momentum currently, okay? We have uptrending price action, but again, similar to the RSI, we have obviously a local top over here, and we have a lower peak on the RSI representing weakness. This weakness has not developed into a shift, a negative shift of momentum. As we can see, we are fluctuating between positive and negative. We do have negative momentum slightly over here, but it is strengthening negative momentum, meaning it is rising. So what I'll be looking for is a break of this RSI trend line representing a shift in negative momentum, and the momentum should fall from that point and the price can follow through. At the moment, guys, I would not be massively taking short positions. Like I said, I wouldn't be massively taking long positions. I wouldn't be massively taking short positions. The price has dropped 5%. It is incredibly volatile now. The market has been liquidated. There's a lot of free liquidity grabs up for available between these liquidity zones. And I think we're going to see a lot more volatility coming to the market today. And I think if you're jumping into high time frame swings right now, or swings or massive scalp trades besides the short term, you're not really trading to strength. Watch the breakdowns, watch for the liquidity shifts, watch for the momentum shifts, and try to scalp those. So short term, I expect a move toward the downside if we do break below that uptrending support on the RSI. Target will very obviously be 25.2 to 24.4. I'm expecting more towards 25.2 than 24.4, at least on the short term. If we do manage to push upwards, I would like to see before we see a move upwards, would be clearing of some of his local high points. I'll be looking for around this point here. I'll be looking for around this point here. And more importantly, if we draw our diagonal trend line in, I'll be looking for a break above that diagonal trend line. As you can see, we do have a degree of consolidation that is occurring here. This, of course, is a pennant formation. It is a bearish pennant formation, as we do have two converging trend lines, an uptrend and a downtrend that has converged with parallel lines or equal diagonal lines after an extended downtrend. If we take a measure move from that point and apply it to the top point, you can see the target is 25,237, confirming that breakdown to 25,200, which will be confirmed when the momentum does flip. So to invalidate that, we need to invalidate the structure. Therefore, pushing above these levels and clearing these levels will need to occur before I consider any longs. If we do take a longs, we're looking for longs above that red line, above those red lines into targets of 26,100 and 26,200 as per the prior mentioned liquidity zones. I hope you enjoyed today's video, guys. A quick summary and detailed analysis of what I'm looking at, what I'm doing, and what I'm thinking. If you've got any questions, leave me down below. Remember, follow us, guys, down over here. Subscribe to the channel. We give you the most unbiased, realistic, honest, and objective analysis you will find on the whole of YouTube. I'm not even kidding about that. This is the place to be. And of course, sign up to the Crypto Academy courses. Link down below. You get access to our 10-unit course. We teach you guys how to trade. If you're new to trading, if you're a beginner to TA, if you want to learn TA, the structural levels, the technical indicators, the basis of support and resistance, the key stuff to build you up, to set the foundation, this is the place to be. Contact us, guys. We have over 100 students, going awesome so far. You can find more information. Of course, sign up to Bitget to support the channel. Thanks. See you tomorrow.